We're still reviewing the new budget assumptions, but this time we're taking a look at the impact on the domestic commodities market, and the head of research at the financial derivatives company, Damilola Akibami, is here with us in the studio to do justice to that. Good morning, Damilola. Thanks for coming on the program. Well, what are FDC's takeaways from the revised budget?
Okay, so what we've seen is that, yes, the budget has been revised, which was highly anticipated because you have to take into consideration the current market realities. And the oil price revision from 57 to 30 to now 25, that just gives us about a $4 headroom because current oil prices are around $29. But the thing is, yes, so we still have some headroom, and that's the budget supposedly for the year. And the average of oil prices year to date is about 43. So the government is still in a good place with respect to oil prices. But the major issue is production, because now our production has been reduced to 1.9 million barrels per day, but that is even still above Nigeria's OPEC quota, which is about 1.67 million barrels per day. And now, if Nigeria's quota is further cut to maybe 1.4, then how do you mirror that 1.4 with what the budget is benchmarked against, which is 1.9? So the revenue projections definitely will need to be reviewed, and that shortfall actually widened beyond what the government is budgeting. And right now they're proposing a fiscal deficit of about 5.2, 5.4 trillion naira. Bear in mind that initially the budget that was approved earlier in the year, the fiscal deficit that was proposed was about 2 trillion. So that means the deficit has increased by over 150%. And how is it going to be funded? Yes, there's the domestic borrowing, there's the external borrowing. We're already receiving some of the funds from the multilateral institutions. We know the IMF funds of 3.4 billion have been disbursed, and we're already seeing the drawdown in that, which is what is leading to the pickup in external reserves. But the thing there is now, yes, we've also received some debt relief packages, so from G20 countries, from China, which would extend to the end of 2020. But when it's time to repay those funds, that's where the issue becomes, that's where the issue is significant, because your debt service costs would increase. And Nigeria's currency has been really volatile. We talk about the naira every time, with the futures market trading around over 500 naira to $1. So the debt service burden is definitely going to increase. And what we are seeing now is that it might increase to about 80–90% of government revenue. And that is actually the main cause of concern. So yes, the budget is a one-year plan, which is for 2020. The medium-term expenditure framework is for 3 years. That can be revised. Even the budget can be revised to suit market realities. But we have to look at the medium term and the longer picture, because when these loans now materialize, or when it's time to repay, how huge is your debt service? Your interest payment is going to be significant. If you are using 70–80% of your revenue to fund your debt, then what is left to drive capital projects? That's the major concern.
Now, let's talk about another major concern. Of course, the major concern for us is activities at the international crude oil market. Can you talk us through the latest development?
Okay, so what we've seen so far, yes, we've seen some U.S. oil inventories decline a little bit compared to initial forecasts. So that was what led to the marginal uptick in oil prices. But oil prices are still trading around $29–30 per barrel, and that's because the fundamentals are still weak. We still have very low demand. The good news is, yes, China is resuming operations in select sectors. We have Germany, France also resuming operations. So if we see a pickup in economic activities, that should push up demand, and that would also complement the supply cuts, because the supply cuts are there. There's a limit to how much output production cuts that you can effect. Saudi is deepening its cuts further by 1 million barrels per day. That is in addition to the 9.7. It also expects its allies to do or make voluntary cuts. But until demand starts to rise, those supply cuts are hardly going to have any major impact on oil prices. So we're still going to see oil prices trading around the $29–30 per barrel. But we know that at least energy analysts, so for instance, the U.S. Energy Information Administration has increased its forecast for the year from about $30 to $34 per barrel. That is actually good news for Nigeria, because now that our budget is now benchmarked at 25, so the higher oil prices are above our budget benchmark, the more we can save in our excess crude account. So I think for now, oil prices in the next couple of weeks to 1 month would be a function of how quickly oil consumers resume and pick up in demand.
Fingers crossed, and we'll see how that plays out. Now, let's talk about power. Of course, power is key. Yesterday, FEC approved 47.2 billion naira to boost electricity supply. What would be the impact of that on the power sector?
Well, the power sector, one of the major issues actually has been funding, financing all the loans that the DISCOs and the GENCOs have. And the issue right now is, like, I know that there are a lot of constraints. So, for instance, right now, if you look at the power update, it's about the power supply, average power supply is about 4,000 megawatts. But we still have a major issue with gas constraints, with grid constraints, and also transmission. So even if the DISCOs, those are the distribution companies, and the GENCOs, so the generation companies generate a lot, how do they get it to the distribution companies? It's that transmission process. As long as that hasn't been resolved, the infrastructure challenges haven't been resolved, we're still going to have a lot of constraints, meaning that power is not, the effective power capacity is not yet actualized or utilized, and that's still a major issue. But definitely with the government's intervention, we expect to see that that will provide some support to what is going on in the power sector.
Head of Research at the FDC, Damilola Kibami, thanks for coming on the program. We'll be taking a look at COVID-19 and cybersecurity when we return in just a moment. Please stay.